We're going to do a brief video on crude oil trading, and we've got a daily chart here for you with a 5-day moving average in green, a red 20-day moving average, and a blue 200-day moving average. Crude is up now on Chicago NYMEX exchange. On the NYMEX, it's up $2.74 a barrel. High is $85.02 and low is $81.72. We'll show you some algorithmic generated prices here in a minute for crude, but let's take a look at the chart. You can see crude has been in a bear market since approximately about the August of this year, 2022. Broke down through the 200-day moving average, came down here and made a low of in September 26th, and it's been working off of that low, trying to rally up back into a bull market. Made a low of $86.25. Got close to the 200-day moving average here right around October 10th, but is sold off. Now, what I'm looking for from crude for entertainment purposes only, I'm looking for crude to catch some support down here around the $80 level, and I'm looking for the price to rally up, probably challenging this recent high of $93 by, not to be too optimistic, but probably by the first or second week of November. Now, all of this depends on what goes on over in the conflict areas of the world, but that we're all familiar with. But if we get normal technical trading, we probably should have some type of rally here into early November, first or second week, and challenge this 93. Now, what could throw that analysis out the window? If we continue to drop, we've put in a low here today of $81.30. Keep in mind, we're still well within the trading range, still well above this low of $76.25. There's some fundamental issues going on with supply being reduced, but at the end of the day, they reduced supply and prices dropped. I mean, that's just what happened. We're looking at it on a chart. So there's something going on. So my forecast in the short term for entertainment purposes only is a rally up to at least $91 and maybe higher than 93, but at least $91 by the end of October. Now, if that does not happen, if we can't get this price above the 20 and above the 5-day moving averages and we continue down, then we're going to challenge this 76 level. But I'm not very enthusiastic about that happening. I don't think that's very likely to happen at the moment. More than likely we'd come down to about the 78 level and rally again, maybe back up to the $87 level. So I see this stock dropping a hair more, catching some support and rallying short term. That's all in my opinion and all for entertainment purposes only, but that's what I see. Let's take a look at the weekly chart real quick, and we can see that this chart on a weekly basis is still above the 200-week moving average, which is very positive for it, and you can see it's been above it since February of 21. It is below the 20-week moving average, and it's oscillating back and forth above and below the 5-week moving average. So it's not a disaster in terms of technical perspective on a longer-term chart. And if we go to the monthly, let's see what we can see. Same type of thing. It's above the 200. It's barely flirting with the 20 and below the 5. These are months, 200 month, 20 month, 5 month, and you can see it's similar to the weekly chart, indeterminate. But you can also see the critical component of not violating this low of 76.25, because that's going to be right at $72 is the 200-month moving average, and if it breaks that, it's going to be negative, as you can see here and here. It's not a good thing when it breaks. This was a tremendous break here. It doesn't look like it, but it's $67 all the way down to $43 in a very short period of time, couple months. So we'll see what happens, but my short-term prognosis is a little rally till the end of the month. Now, let's take a look and see what RBAM Research says about it. It has algorithmically generated prices for crude oil futures. The symbol is CL, and they're put out every morning before 7 a.m. These are out for today, the 19th. We put these out actually last night. You can often get them the evening before if you come after 6 p.m. to rbamresearch.com. We usually put them out. They're for 1, 2, 5, 10, and 20-day holding periods. It's got a buy here, $79.27 on the 1-day, all the way up to buys at $83 on the 20-day. This next column of buys is a higher win percentage, and just basically means that from a hypothetical standpoint, these prices, if they're hit, have a higher percentage of chance of turning a win. Again, all hypothetically, but you're going to get these hit much less often than you would get this first row. Let's take a look and see how this is doing so far. The high is $85.02, and the low is $81. So let's see. This 2-day, 5-day, and 10-day are all active and all showing a profit, and the 20 days active showing profit too. So everything but the 1-day hold got hit, and hypothetically they're all showing a profit today because the market's currently at 84.66, and it looks like you could have made some money on these without delving into it deeper, it looks like you could possibly have made some money already on these. The way these work is you get in today if your own analysis says it's a good idea, and then get out as soon as you make a profit, or worst case, close them out at the end of 2, 5, 10, 20-day hold periods, depending on the price, at a loss. And these are trading days. So that's how these work. You can get access to those and a whole lot more at rbamresearch.com every morning before 7 a.m. There's no cost, no credit card required. There's a link in the description below. You just head over there to RBAM Research, put your email address in there, and sign up for immediate free access. We cover 190 stocks, the major forex pairs, BTC crypto, and in addition to oil, we cover the SP 500, gold, and treasury bonds. Again, no credit card required, and the access is free. Keep in mind, everything you've seen and heard on here is for entertainment purposes only. You can't use our entry prices or commentary for anything other than entertainment. You should always do your own analysis, and you definitely trade at your own risk. If you like this video, please click the like button. If you want to subscribe, please do that as well. And if you have a great comment for us, we'd love to hear it from you in the comment section below.